Good afternoon, Bitcoin boys and girls. Today is Wednesday, July 27th. I'm located in New York time zone. I'm located in Florida, the United States of America. These are the times that I do trade. Right now it's 12:34 p.m. The markets are wide open in the middle of the week. The Fed has a meeting today. They have announced multiple different things. And we're seeing some price action and movement today. These are usually the best days to trade and to be in the market, but these are also very, very scary times. Just looking at the charts, seeing the way it's going to react. Is Bitcoin going up? Is Bitcoin going down? What are we going to be looking for here, and how is it going to work? So to start off, I'm just going to show you guys a couple different TA methods, things that I look at and things that I see, how I predict the market, how I knew where the market low is going to be, why I accumulated Bitcoin between $17,000 and $18,000 as much as I could, why I converted all of my USDT back into Bitcoin under $20,000. These are very, very important things, and these are things that I've been waiting for the last probably 2 years since we've started our bull run. I've been waiting to get back to these prices. I've been calling the $17,000 price for quite some time now. A lot of people have been calling me crazy, telling me that's not possible, that's under last bull run's low, blah, 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 blah. But they also don't understand that this bull run's high was not as high as the previous bull runs. We did not get as much steam, and we did not go as high as previous bull runs. And when you have more money entering the market, it slows down the market. People think that when more money and there's a bigger market cap, the market's going to move faster and it's going to go up higher. Well, that's not the case. The more money that enters Bitcoin and then secures itself in Bitcoin and stays inside of the market, the slower Bitcoin's going to move because it has more liquidity and support to back it. That being said, your range is going to get smaller. So 17 to 69, next bull run we might see 120 or 150, let's say. And we might get stuck between that price and 30,000 again, right? So these ranges are going to get smaller and smaller as the price gets higher and higher and more money starts to enter. Bitcoin is a very, very amazing asset. It is the strongest asset that is on the crypto market, in my opinion. It moves slower than all these altcoins, but it's because it is reliable. Something that is reliable, it has more money in it, it's going to move slower, it's going to move last. They're going to utilize the profits that they're making off of these altcoins and these fast moves to gain as much Bitcoin as they possibly can. We want Bitcoin. We trade Ethereum to make money to get Bitcoin. We trade Solana to trade it up to get Bitcoin. When we look at charts, we look at ETH to Bitcoin. We look at ADA to Bitcoin. That's what we pay attention to the most as a comparison to Bitcoin. Bitcoin is the king of these markets, and Bitcoin is remaining king of these markets. The dominance of Bitcoin is really, really down right now. You would expect dominance to rise at these times when altcoins and Bitcoin is falling. You would expect Bitcoin to eat up the market cap of some of these altcoins, and that isn't really happening. The reason I don't believe that is happening is because the world is going through a recession. If you look at Europe, if you look at Asia, if you look at the United States, all of our currencies are completely abolished, completely down and destroyed. Euro's trading at the same as the U.S. dollar. The pound is almost the same as the U.S. dollar. The Russian ruble is completely down. And yeah, the world economy is really, 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 really struggling right now. And because of that, people don't want to buy anything. They want to sell and they want to accumulate as much of their modern currency as they can so they can eat and they can pay their bills and they can live and have shelter. And those are very, very important things. And you have to take those things into consideration, especially when we're going through a worldwide recession, that Bitcoin might not react the same as it did in previous cycles when people had money. And people wanted to trade and people wanted to spend money. So, looking right here at the daily candles and the daily levels, these are all daily levels. They're marked by the most important daily levels in my opinion, and the daily levels that I want to play. Daily levels in my opinion are very, very important. If you are day trading, if you are scalping your trades up and down, you're going to want to pay attention to these daily levels. They're perfect for rejection and support zones. If I go ahead and I zoom in here on a 15-minute time frame, you can see how how we come down to this daily level and the bottom of this wedge, and it reacts so well. It reacts so well. It bounces, it comes back up to this daily level, and it dies. And then it tries to hold support again, and it fails, and it dies. And it tries to hold here, and it dies. And it uses it as resistance. These daily levels are very, very important. You can trade a lot off of them. It came back down to this, and this is where I took my long. This is where I started accumulating the longs and taking the price point up. And that's because I was waiting for a good area of support, somewhere where I can find a double bounce off of it. Like here, it was a nice double bounce. But the thing about this was it came up and down so fast that it had the energy to break through. If you were watching this, you wouldn't have really bought this or tried to trade this. You would have known it was gonna break through. This was momentum. It was a momentum move to push price downwards. And yeah, right here is where I started accumulating. I started accumulating here, took the risk. When it came back and it retested and it came back, I bought some more and we came up. Once we broke this next daily level, it kind of confirmed to me that, hey, we're up, we're in the clear, we're going to move up a bit. I'm going to take profits at this daily level. I'm going to take profits at this daily level, and I'm going to try to take profits or close out the trade at this daily level. Right now, I'm trading at 10x. It's doing well. It's about 23% at the moment with the price being where it is. My entry is about 21,800. And yeah. Right now, we're going to see Bitcoin, see if it could hold this daily right here at this 21.5, 21.6 level. It doesn't look like it wants to. It looks like it just busted right back through it. It's turning it into water. And yeah, if we close this candle in the next 2 minutes, this 15-minute candle, we will probably see it come back up, reject to make a little double top, and then fight price downwards into this 21.1, 21.2 area, and try to bounce back off of this daily to hold that buy momentum and buy support to keep this uptrend. To keep this uptrend going and to keep price moving upwards. So yeah. In my opinion, daily levels are very, very important. Pay attention to these daily levels. If you are day trading, if you're trying to move money fast and get out, pay attention to the daily levels, play the daily levels. That's how you get in. That's how you get out on a daily basis. I promise you that if you focus on daily levels, if you make daily levels important to you, you will win a lot of trades. If you use daily levels as support and resistances, if you take trades off of them and you set your stop losses under where you've purchased on those lines, and it dips under and it breaks under, there is nothing wrong with taking a small loss. There's nothing wrong with it. There's nothing wrong with taking profits. People always love to take the loss, always love to pull their price down and continue to add margin until they're liquidated. But when they're up 40%, when they're up 50%, they never want to take profits. The greed and the emotion that they have, it just takes them somewhere else. I don't know why. I don't know how. You start using leverage so you can make faster money, so you don't have to spot buy at 20 and then sell at 23 to make a 10% profit. Well, you're using a 10x trade. You're up 40, 50% on a $300-$400 move. Take the profit, man. Take the profit and run. So yeah, pay attention to dailies. Dailies are very, very important. As you can see, we have this descending wedge here as well that we've been following. We broke below it and now we're back into it. So I'm assuming we'll probably come back down here, retest this area, and head up, kind of creating a double top. I mean, not a double top, a double bottom right here. And yeah, if we go ahead and move on to the next chart here that I want to show you guys, let me go over to the weekly and change it to the logarithmic. I see a lot of YouTubers and people drawing this chart. I don't think that they draw it correctly. I don't believe that they've drawn it correctly. They like pulling it from the low price, which would be here. This would be the low price. I like pulling it from what am I saying? I like pulling it from where the halvings begin. So we got a halving, I believe in early 2020, March, April of 2020, we got our halving. So I like pulling these lines from the bottom wicks right before the halvings happen. These are the halving dumps to get in and accumulate more Bitcoin to send the price upwards. So if I draw these lines out, this is what we get. We get this beautiful arch pattern for Bitcoin following for 12, 13 years. Not a problem. Just continuously following this. If we go ahead and we look at previous price points, this is where we are right now. This is where we are right now. And this is where we are right now, actually. So, if you can see, every single time we got to this point where we've come off the all-time high and we've held this is our 30K zone in 2014, and we've broken down, we found a bottom. Same thing here. In 2017, we came down. This is our 69K for our bull run. This is 19K for the last bull run. I'm not trying to confuse you, but I'm trying to compare it to where we were here. So this is going to be our 69K, right? This is going to be our top. We came down, we held 30,000, busted through 30,000, this 30,000 point, and we came all the way down to our 17,000 where we are now. After we reached our 17,000, Bitcoin had a run up and sideways consolidation on the 30,000 zone. This obviously was the last run, so this is the $9,000 zone, not the $30,000 zone. I am just comparing it to what we would be seeing here. So if I was to look at what Bitcoin is doing right now, especially with this big pool of liquidity from this high to this high, we are coming right in here to say, okay, if this is the bottom at 17,000, if this is the case, if we're here, then we would be getting a nice little run up either up here and holding this, or maybe even higher into 39, 38,000, and then dumping back down to find our low again somewhere next year, right before that halving takes off in 2024, end of 2023, end of 2024, we should come back, wick down, and grab our bottom again. If we do that, I don't see us really coming much lower than this. If it does come lower, we would probably see 16 to 17,000 again. Everyone's screaming $10,000, $9,000. It's going to be very, very hard to get there. It is possible. Anything is possible, especially with the world news and everything that's going on. I just don't see it as being likely. I don't see the price of Bitcoin going there from personal experience and in my time. If we were to just wick down right now immediately to this line, that would be around $11,000, $12,000. And yeah, you would get that price. But if Bitcoin does respect what it's been doing for 12 years, then we will see a bounce here at this liquidity zone. It'll take us up, it'll fight, it'll try to gain a new hill, and it'll kill itself somewhere around here, and it'll die back into its line. When it dies back into its line, the price is going to be much higher. The price will be much higher. It'll be 16, 17,000 instead of it sitting at 10, 11,000 where we are now. So yeah, everyone's screaming 10, 11,000, but that's if Bitcoin goes there now, right? We can see Bitcoin go there now. It can do that. It is very, very possible that it does do that. It's just not likely. It's just not likely. Let me move into a different chart here. This right here is just a liquidity chart. It's going to show you where the highest points of liquidity are, where it's going to get bought, where it's going to get sold. So right now, these are the ranges that I play. I would sell this and I would buy this, okay? So I would not trade anywhere in the middle here. I would not launch any trades anywhere in the middle. I wouldn't trade here. I wouldn't trade here. I wouldn't trade there. I would only trade when it's in my zones, when it's in the highlighted areas. Those highlighted areas are going to give me the highest monetary gain. They're going to be the best trades for me. They're going to be the safest trades for me. Because if I enter a trade right here and Bitcoin decides to go to the top, and I enter a trade again and Bitcoin busts, trust me, I'm leaving my trade. But 90% of the time, Bitcoin will take a low and even retest if it has to, if it's going to come back up, correct? So I'll be able to take this down, take some profits, and be happy. This right here is my favorite chart. This is the almighty chart for me. This is what I follow. This is what I love. This chart right here is going to really show me the direction and what Bitcoin is trying to do. It's going to keep Bitcoin's market structure in place, and it's going to tell me if we are breaking out or breaking below. Right now, it's going to be very, very, very hard for anybody to predict Bitcoin to break below, but it's going to be very easy for us to predict Bitcoin breaking up. The reason is these liquidity zones, right? So like we have this top right here. This would take out quite a bit of shorts, and then we have this right here, this 26 to 28,000 zone, which would wipe out plenty of shorts. The thing is, we're much closer to the long liquidity zones, where we're busting out the longs here and here, that the price can just react so much quicker to where we are now that I would be only taking long positions. I wouldn't be looking for any short positions until we reclaim and come back up to these highs, this $23,000 dollar zone, somewhere towards the top of this range. That is the only time that I'd be looking for shorting. If you're trying to short, let's say, resistances like this and take them back down to the line, that may be okay, but you would only do that if you're experienced and you're watching the chart. I would never suggest to like try to short this down into a bunch of long liquidity. Like I would never ever suggest any of you do that. I would set buys down here before I set a short. Never do anything like that. This chart right here is going to show us pretty much exactly where Bitcoin is going to be heading. I love this because it shows me the way we're uptrending, it shows me the way we're downtrending, and we are respecting it. When I say we are respecting it, I mean we are respecting. Oh, I'm on log. I was wondering why. I was like, okay, we are respecting it. So this uptrend, we broke below it here. This was very, very bullish for me. Whenever a trend breaks below and then regains dominance to the upside, it's very bullish to me. This was something that I was able to trade up from from 19,600 all the way up to 23,800 is where I ended up leaving my trade. And it was a very, very beautiful trade up. We saw Bitcoin come down. We wanted to see Bitcoin hold this area right here, this middle area. But Bitcoin did break below it right there and wick back up. And when Bitcoin whipped back up, we took a short right down into our liquidity zone. This is where we exited our short and we started longing. Right now, Bitcoin is trying to gain dominance on the buy side. Right now, Bitcoin is trying to gain momentum to the upside. That is what we're looking for. That is what Bitcoin is looking for. That is what the market is looking for. But is that what the world is looking for? Is that what the news is looking for? Is that what people's emotions are going to tell us and do? Or are we going to fall lower? If we do fall lower, it can get very, very, very tragic here, okay? Because we would be completely changing our market structure, our TA, the way the market is moving and reacting to all of our price points, all of our buys, all of our sells. It's perfect at the moment. It's playing out perfectly. It's coming up to our areas, it's coming back down, it's rejecting, and it's playing them. But right now with all the news that's coming out right now, with all of the change in the markets that's happening, we can see very, very, very big reactions to the upside and the downside, especially if we're going into a recession, and this recession is real, which it is. We are going to see amounts of money you've never seen enter these markets and exit these markets because they need to cover their capital for the next year to 2 years because no one's going to have any. They stop printing money, interest rates are going up, products are more expensive. Money needs to be taken and money needs to be made in some way to where they can use that money to avoid bankruptcy. They could use that money to avoid losing everything. Especially big corporations. When you're operating at $1 billion corporation and you need billions of dollars to operate, it's not going to be easy to fund billions of dollars when your money's worth half, and when products are up, and when you have to pay double to produce a product. Like, You think it costs Google, let's say it costs Google $100 to create their phone, to produce their phone, and now it might cost Google $182 to create their phone. So their cost goes up, their price has to go up. They still have to appease customers because customers don't have money and monetary gain, monetary wealth when the economy is down to purchase these products at these high prices. So people stop buying them, and then Google sales go down. When Google sales go down, they have to cut costs, they have to fire people, they have to remove certain products, and it's hard for them to innovate and create new things and push the market forward. So we're at a really, really tough time right now in the market. Anything is go, anything can happen. But right now, the market is pointing at a swing upwards. The market is fiending this swing to the upside. The market really wants it. It called the Pi cycle bottom. It called the Pi cycle bottom down here. When we wicked down out of it and came back in, it called Pi cycle bottom. Pi cycle bottom is a very, very important indicator. It's called the bottom of every single market. After it's called that bottom, we usually go up about 20 to 30% from there on out and then crash back down. So that is a very, very bullish indicator. Everything that we're seeing here is very, very, very bullish. If I take the price target from the bottom of the range to the top of the range and measure it from where we originally broke out, it'll take us directly to 26,800, which is the bottom of this liquidity zone, the bottom of here, and it will completely wreck these people. It'll completely take out all of these shorts, and price will probably reverse back downwards, back into the $24,000, $23,000 zone, and we can try to pick up more liquidity here. If it fails and breaks down lower, then be careful. We are going to probably end up seeing much lower prices if we end up breaking this liquidity zone after we come out and up. If we do break down, expect us to break down past this zone right here and come down into this 19.6, 19.2, 18.9 area. I don't think you'll end up seeing 18.9 or these lows again, but at least the top of this zone, 19.6, and trying to come back out. I really don't want to see anything lower than where we are right now. We got a good little lineup. We got the bottom of our uptrending wedge or bear flag. We have this nice little liquidity zone, and we also are just at a very, 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 very strong area on the chart. This 20.7, 20.4 area has proven itself time and time again to be very, very strong. I believe that it's stronger than 1920K. 1920K is just a psychological level. Everyone's so addicted to it, but I've watched it bust through it 8-9 times already and completely fall 1 to 2K and wreck everybody. Anyone that has been trading 19 and 20K is getting wrecked on both sides of the coin, because every single time they sell it, it goes flying $1,000. Every single time they buy it, it goes the opposite of $1,000. And that's just what's happening at 1920K. It's a psychological level. It's not really a level that shows chart history and chart support and big gains. So I kind of just stay away from that. I play what the chart tells me to play, and that's what I worry about at the end of the day. One more thing. You can see that there's this downtrend, this yellow downtrending line, which is also playing a part in this chart. Once we broke down, we kind of fell right into here, and now we're retesting it and failing. We want to reclaim this. If we reclaim this, that'll be very, very good for an upside move. It'll kind of confirm that we'll go higher. If we don't reclaim this and we come back down and we try again and we fail again, we will probably end up seeing lower, and the price will end up breaking down lower. If we can come back down and bounce off this one more time and reclaim this line and hold above it, that will be a beautiful bullish move to the upside. We will be able to take price upwards, is what I believe is going to happen anyways. Even if Bitcoin wants to blow off some steam and come down to 16, 17K, create a new low, I don't think that it's just going to go boom and fall like that. That just doesn't happen. You need the money to flush. You need the money to recharge to be able to break through all of this. If you want to break down the buyers here, you need enough power to break down the buyers there. And the only way to do that is to get rid of the buyers here first. And to get rid of the buyers here first, you must send the price upwards. and then back downwards, creating a double top, creating this M, creating this momentum to slam it through this area. That is the only way, in my opinion, that we're coming back through and coming back down, is if we can gain momentum back up to go out. If we come down and we fall and we bounce here, in my opinion, you're going to see a very, 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 very large upwards move, because it didn't give enough time for people to accumulate these cells and gain enough monetary power to push through this level. This level is going to be hard to push through without momentum. So if we come back up first and then slide down, we might have a very good chance of breaking this 18 to 19K zone. If not, hallelujah, we'll end up going up and we'll go flying out. So that's really what I see with Bitcoin right now. One more thing that I can show you guys that for me measures the whole entire bull run and the whole entire. Okay, it's gonna be on a whole nother trading view. Cool. I'm gonna have to use the logarithmic. Okay, so this right here is my all-time halving cycle and bull run chart. This right here shows us when the halving starts and when the bull run ends, when the halving starts, where the bull run ends, where the halving starts, where the bull run ends, where the halving starts, and where the bull run ends. All of these are fib retracements from, if you look at this one, from the bottom to the top of the run. This right here is a fib retracement from the bottom to the top of the run. And this right here is a fib retracement from the bottom to the top of the run. And every single time Bitcoin comes right back to this 0.78. It might fall below it a little bit, but it comes back out. Bitcoin comes back to its 0.78, might fall below it a little bit, but it comes back out. And it comes back out strong as soon as that halving happens. And every single time the halving's about to happen, we're here. We're literally at this price, and we come out, the halving starts, and we go ham. Boom, right here at this 0.78, the halving starts, and we go ham. Boom, we're at the 0.78, but we're nowhere near this halving right now, which means we either need to come back to below it, right? Get stuck below it, and then come out, right? And then come back to it and start our run, or we're already preparing ourselves to come out and hold up here and then dump back to start our halving. So it really just going to depend on how price action moves. All the way in the past, we've always dumped below this 0.76. Right now, we're respecting it. We're bouncing above it. We still haven't hit the liquidity of it. So they may still attack this. But if they do attack this, and if they do attack it in the near future, we're going to see some type of double top. We're not just going to see it fall down. It's going to come up. It's going to come down. It's going to come up. And it's going to crash back into it. That is the only way that I really see this gaining enough momentum to bust itself down. That's why it's gained a high price. And the only reason it would gain this high price is to pump out or to bring itself back up to dump into it and destroy it. So be careful, guys. Right now is a very, very tricky time for traders, and I would just trade with an open mind, trade the levels day by day, take profits, do not hold trades, take profits, take profits, take profits, take profits. Don't be a moon boy right now. There's no point in being a moon boy. No one has money to buy these assets. No one has money to sit back and just keep accumulating Bitcoin. We're not getting stimulus checks. We're not all sitting at home. This is not the same. The world is not the same as it was 2-3 years ago. We are in a different time. Money has slowed. If we look at the other markets, if we look at gold, if we look at oil, they're completely shitting themselves. They're shitting the bed. They're not reacting well. They're reacting terribly to the US dollar. The US dollar is flying. Gold is dying. Oil is dying. Stocks are dying. Bitcoin is dying. All the crypto is dying. Everything is just hitting the ground because the almighty dollar is having its run. The almighty dollar is strong today as well, and it just wants to push up. That's the moral of the story. Be careful, because the US dollar is your enemy. It is my enemy. It is everybody's enemy at this moment. And yeah, thank you guys so much for watching. I hope you guys learned a little something, and take care. Thank you guys so much.